supermicrocomputer has put investors on a roller coaster ride in 2024, soaring to start the year, and then now in recent months, the stock price has collapsed on the back of allegations that its financial statements were manipulated and inaccurate, and then the company itself delaying reporting its financial statements, its auditor resigning, etc., etc. All these latest developments driving down supermicrocomputer stock price. But looking at the business itself, revenue is soaring, profits are soaring, and it's partnered with NVIDIA, selling NVIDIA products which are highly in demand. So it's a lot of mixed up information here for investors. You're getting some good news because the company's sales are going through the roof. And then simultaneously, you're getting some bad news because the financial statements are delayed. It's being threatened with delisting from exchanges, etc., etc. So it's a difficult stock to understand. It's a difficult business to follow, especially because of these latest developments. I will do my best here to simplify things, and I will do my best to make a stock price prediction for Supermicrocomputer in 2025. I'm going to use several estimates and assumptions to make this prediction. I'm going to share with you all of the estimates and all of the assumptions I'm making and be as transparent as possible so you can see where I'm getting all these numbers from and decide for yourself whether I'm being too optimistic or pessimistic. All right, so let's jump into this.
Hey everyone, I want to take a moment to thank the sponsor of this video. Moomoo is a trading platform where you can buy and sell stocks and other investments. I use the platform for investing myself. If you join using the link in my description, you can get up to 15 free stocks.
All right, so one of the numbers I need to make the stock price prediction for Supermicrocomputer stock in 2025 is its earnings per share forecast for 2026. Now, according to Wall Street analysts, they think its earnings per share are going to come in at $3.75 in 2026. That's the average among the 6 analysts that are following Supermicrocomputer stock. The median forecast is for $3.71. So the median is 371, the average is 375. You can get the point here. It's somewhere in that range where they expect the earnings per share for 2026. But remember, nobody knows what's going to happen in the future. This is just the Wall Street analyst best estimate for what they think the company will deliver in that year. I also need Supermicrocomputer's forward price to earnings ratio, which as of this recording stands at 10. This is the valuation the stock was trading at before all the growth from artificial intelligence in data centers really drove demand for its products. That's when the stock price valuation soared to astronomical levels. And remember, this is around the time in March when I told investors to take profits in Supermicrocomputer stock and no longer own it at that point in time. Still, the company's valuation has come down, but this level where it's at is right around where it was in mid-2023, before all the hype and before all the enthusiasm. So it's not like the stock price is trading at some ridiculously cheap valuation right now. It's just returned to the levels it was trading at before the AI boom. In fact, before 2023, the valuation would be in the single digits, right? So this stock has not been one that trades at a premium valuation because the business is not one that generates premium profitability or premium cash flows. It's a low margin business, and you can check that with its competitors, Dell Technologies and Hewlett Packard Enterprises, which are also generating skinny profit margins and skinny cash flow from operations, and skinny numbers in those categories result in valuations that are not premium. As I shared with you in the beginning of the video, Supermicrocomputer stock price has been volatile this year, starting at around $35 per share, jumping all the way up to $120 per share, before falling now to $38 per share. Of course, this is all split adjusted. The company did a stock split a couple of months ago. So now that I have the numbers we need, we can go ahead and go to our stock price target for 2025. And as you can see, my stock price target for 2025 is going to assume that their financial statements are accurate with no restatement needed or fraud detected. Okay. If any of those things come to light, this stock price prediction no longer holds, right? It's no longer going to be valid if the financial statements are not accurate or if they need to restate some things, if there's fraud detected, any of those things would make this void. You would need a new analysis. I will do a new analysis, a new update when there is any of those big items coming to revelation between now and when you're watching the video. So let's get that out of the way right up front, and then let's go into the analysis, okay? So at the midpoint of the Wall Street analyst earnings per share target for between the average and the median, $3.73 EPS expected for 2026. If you apply the 10.25 forward PE ratio, where it's currently trading at, to the $3.73 EPS target, you get a stock price of $38.23 for Supermicro by the end of next year. Of course, that's precisely where the stock price is trading at right now, $38. So it looks like that's what the stock market is expecting from Supermicro Computer next year, to be on pace to deliver these earnings per share and for the forward PE multiple to stay relatively flat, not increase or decrease. That's probably why the stock price is trading at the valuation it's trading at, very close to this price prediction if you apply the EPS and the forward PE. But if the forward PE were to increase to 15, let's say the company files their financial statements, everything looks clear, and all of those question marks are answered, and investors can feel comfortable about the company's management and their financial statements, and the valuation increases. It could increase to 15, a forward PE of 15 would be reasonable in that scenario, and that would lift the stock price up to $56 per share. However, if not only the financial statements are proven to be accurate and everything looks good, if demand for its products continues to soar and all of those things are working well, the forward PE could rise even higher. It could go to 20, which would lift the stock price up closer to $75 per share. However, if these question marks persist and there remains that cloud hanging over the business, the forward PE could fall further. And if it falls to 7, that could cause the stock price to decrease to 26. Now, there are scenarios that could be much worse than this, such as if there was fraud detected, if the financial statements need to be restated and the numbers are significantly lowered, and there's questions over the management team and the management team doesn't resign, all of that, it could drive this stock price way, way lower. It could go down $5 a share, $1 per share. The downside is so low when you have these kinds of question marks about the business. That's why I put that asterisk. It's the only time I've put this asterisk on any of my valuation predictions for next year. It's because there's so much uncertainty surrounding this company and this stock. However, all that being said, considering all of those things, right? All of that downside and then all of that upside if things are cleared up, where do I think what's the base case scenario? I think the valuation multiple remains right around where it is here at a forward PE of 10. Maybe the forward PE could see a little bit of an increase if these developments are put to the background and they're not so prevalent about, let's say there's a solution that's a kind of mix, right? It's not all great, everything is not cleared up, but it does remove some downside. So in that scenario, that's the scenario I'm forecasting as most likely as the outcome of these recent question marks, is that there is a solution, but the solution isn't one that makes everyone really happy. It's just one that kind of answers a few question marks but leaves others. And so that's the scenario I think that's going to be most likely. And in that scenario, I would forecast Supermicro Computer's stock price for next year to be somewhere in the range of $35 per share and $42 per share. So right around where it is today, and you can understand that the risk associated with this company and the potential for increases or decreases in share price, I don't think it's an attractive investment for long-term investors. I think it would be prudent to get more information before going into this investment right now, because there's too many question marks, and those question marks could have huge downsides for the business. There's also huge upside if they're cleared up, right? And that could send the stock soaring. So there's too much speculation, too much area for uncertainty, where it's difficult to forecast the likelihood of those outcomes, the probability of those outcomes. And so that's why I'm providing such a wide target and providing so much caution with Supermicro Computer. As always, do your own due diligence. This is for entertainment purposes only, and conduct a lot more due diligence before making a decision on investing in any company. Of course, I have all of these spreadsheets available for all of you. If you join my channel as a member at the investor tier, you can get access to all of these stock price predictions and my ratings for buy, hold, or sell. Also, I have dozens and dozens of videos on Supermicro Computer stock explaining all of those recent developments I talked about, including the accounting financial statements delay, the allegations from the short sellers, the really strong revenue growth expectations. All of that I have covered for you on my channel in those videos.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.